morning, everybody, and welcome to our third episode of Easy Equities What the F. It's great to have you all with us once again. And as a reminder, this week we're spending some time talking about pricing, the value in shares, some challenges on the platform regarding liquidity, and we welcome all your questions. Big thanks to Stantwa, Bonolo, Barry, Lesedi, and the team that are helping answering your questions. And please be sure to post those in the Q&A section so that they will get to them and also keep a record. So Q&A. And good morning to all of you. Also, these sessions are available on our YouTube channel. So if you miss those or want to rewatch anything, they're available on the YouTube channel. Without any further ado, big welcome to our very smart Nilan Mora, Head of Trading, who knows everything there is about shares. Good morning, Nilan. How are you doing?
Morning, Carel. I'm very well. How are you doing?
Good. How are the markets doing, more importantly? Are we making money? What's happening?
Yeah, well, yesterday we saw a bit of a sell-off in the US, and so I'm sure over one of these episodes we are going to discuss sort of what to watch kind of guide. Where do you get cues from in terms of directional movement, etc.
Well, let's do that right away. When you say sell-off, you think that we all know what that means. What does that mean? Sell-off? What?
Sorry, yesterday.
Or what?
Yeah, so yesterday we saw equity markets across the US end about 2% lower than during the day. So quite likely that we come in a bit lower this morning as well. And importantly, we live and operate in a globalized space. So international moves do affect our markets, sometimes to a large degree. And about 60% of our local exchange has external sources of revenue. So they operate in these foreign markets. So naturally, when international markets are under pressure, we will see the effects of that locally as well.
Right. So Nilan, today I want to talk a little bit about the JSE and how the pricing and value of shares work. So if I understand it correctly, the JSE was started 1860, 70, round about there during the gold rush. So we've got a stock exchange that is very old, as in it's been around for a long time. And it's still, I think, in the top 20 by market capitalization of stock exchanges. Is that right?
Yeah, that's correct. I mean, when you start comparing the local exchange to international exchanges, we dwarf by comparison. We're about the 10th the size of the New York Stock Exchange in terms of market capitalization. And for attendees who want to understand market capitalization, it's a simple calculation. It's a number of shares in issue of a company times the share price. And that defines the market cap of a specific company or a listing, or more broadly, the sum of all of those would define the market cap of the exchange.
So the size.
The size, exactly right. Yes, started late 1800s in the middle of town. Things way back when were quite different, obviously. No means of electronic trading. Physical pits, what they call pits, were little segments on a physical floor in a building where people would go, and I'm sure many people would have heard ticket tapes back in the day. And you'd have runners running around with little pieces of paper that were actually trade instructions. And so it became so popular that people crowded out onto the street. They couldn't fit into the building, and they had cordoned off a section downtown to house all these people, and that's how the market started. And fast forward from there, this is what we have today. You sit anywhere in the world, log onto your phone, and actually execute trades
via Easy Equities, of course.
Sure.
So Nilan, tell me, how many shares do we have on our stock exchange? And just in terms of size, are we still the biggest in Africa? Because I mean, size does matter, or are economies like Nigeria bigger?
Yes, no, we're the most advanced and the biggest on the continent. JSE, to give an example of size, year to date this year, we've traded about 2 trillion rands worth of value. So the numbers are, 9 zeros. So is that right? Yeah. 2 and then 9 zeros, yeah. So so the numbers are absolutely astronomical. And I mean, if you want to understand how the exchange works, I mean, I suppose the first point is just to understand what an exchange is. So if you consider platforms like Take-A-Lot or Bid or Buy, etc., these are all actually proxy exchanges. It's exchange of goods or assets for some monetary value. And one can imagine that the moment you introduce financial assets where the quantums are the quantums that we've just mentioned, that has to happen in a very secure and regulated environment for the safety of participants in that market. And so, the JSE is a marketplace ultimately that is highly regulated, and promotes and facilitates the trading and settlement and exchange of financial assets from one party to another.
And tell us how many shares are on the JSE, Nilan? I mean, how many are listed? 20, hundreds?
So we've got about 350 actively listed companies in the JSE All Share at the moment. Naturally, as one can imagine, market caps and pricing of these shares vary significantly. Naturally, the cheapest one being a cent, and I don't like to say the word cheapest because people misconstrue that for the value that we ascribe to a share. So, the least amount you'll pay for a share is a cent, and the most you'll probably pay for shares is probably Naspers at 3,000 Rand or 3,100. Again, to draw the comparisons, that pales in comparison to a Berkshire share that's $260,000.
Yeah, it's phenomenal. And I mean, just to remind the community, although I suspect all of you know this, but that is one of Easy Equity's unique points, is that we felt it inappropriate that ordinary investors, you and I, would not be able to access those shares, because to buy one Naspers share, you need thousands of rands. And so we enable you to buy a fraction of a share, which means that somebody with 100 Rand can have the same portfolio as somebody with 100 million Rand. Is that correct, Nilan?
Yes, absolutely right. So let's say you like Naspers and you like the story, and you really see good things coming for them, and you subscribe to the view that there's value in that share, and you want to be a shareholder, but you've got 1,000 Rand. Traditionally you would not be able to get exposure to Naspers with your 1,000 Rand. And so what we've done, which is pretty unique, that no one else offers currently, is we allow you to take your 1,000 Rand and buy 1,000 Rand worth of exposure to a Naspers share. We will physically go and buy a full share, and you have all the economic rights to, let's say it's 3,000 Rand, you have all the rights to a third in terms of the economic value of that share.
So you mentioned value, which I find really interesting. So it doesn't necessarily mean that the more expensive a share is, the more value it has. So maybe you can talk us through users who perhaps are looking for opportunities. How would you go about it? I mean, a share that sells for 20 or 30 cents, why would that have value, and how would I establish the value? What must I do as an investor?
Sure. So they're very pretty complicated and in-depth valuation models that people use when establishing, and I don't think we're going to go there. We're certainly not going to go into that. We'd need a week, probably 8 hours a day to unpack that. But there are various metrics that one can use, and sort of, simple things that you can use. And people tend to be quite specific in what they choose. So there are two broad approaches, one being a fundamental approach and one being a technical approach. A technical approach will involve simply looking at a chart, identifying chart patterns, and deciding on your entry as to whether you see value or whether you think a share is cheap basis its historical price action, because that is what is represented on a chart. A fundamental approach would involve quite a few more details. So you would fundamentally look at the company, and some of the things you would look at is, what is the company's PE ratio, so price earnings ratio, relative to that of the market. And let's say the overall market is trading at a PE of 18, and the specific stock you're looking at is trading at a PE of 12. Well, that would indicate that you probably want to dig a little bit deeper, because you would consider that cheap or relatively cheap. There are a few other simple metrics that people can use from a fundamental perspective. You know, what's happening to its dividend? Is there dividend growth? Has it been increasing its dividend that it's been paying out? That could be another one that you use. And so I suppose the point I want to make is that, you know, we find that people are quite often exclusively in the camp of technicians or fundamentalists. And the reality of it is that you shouldn't rely on either exclusively. There has to be a combination of both. So fundamentally, you should use those measures to decide what to trade, and then technically you should use your chart patterns, etc., to decide when to trade that instrument.
Thanks, Nilan. And just to remind everybody of some of our conversations earlier this week, there's free research available on research.easyequities.coza, which often gives a mixture of the fundamentals and some of the technical on the shares that you're talking about. But I'd also like to add another dimension, Nilan, which is that people must go with their gut. And part of the fundamental investment strategy is also, what do you hear about a company? So if a company is run by people that don't particularly care about their employees, is that something I want to invest in? And I think that people shouldn't be scared when they don't look at charts or when they don't understand PE ratios and the like. And something that I find fascinating in investment is, yes, that's interesting for many people. And there are a few, very few like you who understand that. And that doesn't mean the rest of us can't invest. We can use some of that information, but we can also take our own minds and what we know about our own environment. And we've seen that with Easy Equities users. So, you know, if there are shares that you've heard good things about and you're keen to take an opportunity, then do so. But maybe the caution, Nilan, could be to talk a little bit about diversification. So, you know, if I've got my 1,000 Rand and I buy one share, is that better, right, wrong, than buying two different kinds of shares? What would you say?
Okay, so as an investor, I would answer wrong. And the reason for that is, you know, it can probably be best summarized by the fact that no one actually questions or studies or understands the risk they assume when they're making money. Right? It's only when things go against you that you start questioning and start looking deeper. So what the concept of diversification simply brings is that it spreads your risk. So let's say you took your 1,000 Rand and invested 200 Rand in 5 different stocks across the exchange. So different sectors of the market, you know, one is in technology, being your NASPers, one is in healthcare, one is in retail, etc. And one specific industry is affected, well, safe to say 20% of your money could be wiped out or experience, a lower valuation. But you would think that the balance would hold up relatively well and would in part compensate for that fifth that's at risk. Flip to the other side, you've got 1,000 Rand in a technology company and there's new technology that makes this company's technology obsolete. You face the full risk of that with all your capital. So, you know, diversification is often an ignored concept because people hear a story, right? They don't hear a story about these are the 10 stocks I think you should get into when you're talking to your mates over braai, which seems like a distant memory these days, but will come back. But you know, you have those conversations, and it's always about a specific company or a specific stock. It's never about a group of stocks. So yes, consider that in your investment horizon. You know, if it's money that's immaterial, then fine, go ahead. You know, because you never know, they might be right. But if you're serious about your investment journey and you're serious about the money that you're putting to work for you, then you got to look a little more deeper than that.
Thanks. So just to summarize, the price for share does not necessarily indicate the value of it. So absolutely explore different shares. Easy Equities allows you to own a fraction of a share. So even shares that have a high Rand value, you can own a part of. And diversification is perhaps something you want to consider. So Nilan, I want to talk about something else that really pisses me off and a lot of our users, and I want to know why you do it. And it relates around putting limits on certain shares on our platform. So some users come on and then they want to buy or sell a particular share, and it says you can only do it to that limit, that value. Yeah. Why do you do that? It's surely up to me about what I want to do and how much. So please can you explain that to us?
Okay, so it brings into discussion the concept around liquidity. At any given time, there's a finite amount of shares available on exchange. What we've done, and our guys in the risk department have done, is we've built a matrix that we review frequently, that takes into consideration the volumes traded on a specific stock, as well as the volatility of that stock. So how much does the price fluctuate by? And we built a matrix around that. And we said, okay, well, with this specific stock, and typically what you're going to find in that pattern is that stocks in the top 40, so in other words, the highest market cap stocks, the biggest stocks, will have large limits, north of R1 million per transaction. Importantly, that limit is a transaction limit. It's not your total position. So let's say the limit on a specific easy equity listed counter is 5,000 and you want to do 15,000. We're not going to stop you from doing 5,000 3 times. We're simply saying that when you do your 5,000, we need to be fairly confident that we can go and trade out 5,000 rands worth of stock. Oftentimes what happens is we'll show you 5,000, but there might be 1,000 or 2,000 worth of stock available on the exchange. We'll still fill you in a 5,000 in your 5,000 tranche, and the rest becomes our risk to go and trade out of and manage through the day. And we have a team and highly complex systems that manage that for us.
So Nilan, sorry to interrupt you. So just simplistically, the level that you predetermine is a way to protect investors and also easy equities to make sure that we can deliver on what an investor needs.
Absolutely. When you go and transact that 5,000, right, what needs to happen in the background is we physically need to go and buy the stock, through the settlement process. You're not involved in that. We take care of all of that for you. And then actually deliver that physical stock to your name as the beneficial owner. And that happens, through company records and settlement cycles that we run in the background. But we need to make sure we can get that stock. A good example, something like Comair, some clients bought Comair minutes before the suspension. We couldn't go and get that stock. So there's no ways of us delivering that to you. So, Carel, I suppose, to summarize the discussion around the limit, it's not that we want to restrict you or that we don't want your business. I mean, that would be contrary to why we exist. But it's largely to say, let's do it in a safe and manageable way to ensure that there's sufficient liquidity. There are multiple participants in the market, all looking for the same liquidity. So, everybody's looking at that specific time at that price, and that's the price you get filled at. Right? Just remember, just going back on 2 days ago discussion, although you see 15-minute delayed prices, we go and execute at the ruling price in the exchange at that time. Everybody's looking at that price at that time. So we need confidence that there's enough liquidity and enough volume for us to go and cover that position for you.
Great, that makes perfect sense, and I hope it helps the rest of the investors. It certainly helps me because it is something that I find quite frustrating, particularly on some shares that I'm really keen on. Nilan, something else that I thought might be useful. Let's answer a couple of questions. Alexander's asked us one which I find interesting around Elon Musk, for instance, tweeting something about his company, and that either increases or decreases the share price. Now, it gets back to the value debate a little bit that we're having. What should investors do by looking at the CEOs and other people within a company? I mean, if they're selling shares, does that necessarily mean I should sell shares? If they're tweeting something, should I quickly buy? We had a user who also said he sold some Discount shares after reading about it and now regrets it because he was emotional. So just a little bit about the value around how it's influenced by the CEOs of companies, please.
Sure. So there are specific people and specific funds that actually follow these announcements. It's mandatory to make formal announcements locally if any related parties transact on a company's share. So, for example, if our CEO or CFO, anybody in senior management needed to do something on the share, it has to be disseminated through what we call SENS, which is the JSE's medium of communication, with the broad public. Oftentimes a lot of it is noise, and like the Discount shareholder, he got caught in the noise and now regrets it. We don't understand the reasons behind why people need to do what they need to do. Sometimes it could be sinister, and that takes a lot of work to try and figure out, but by then the share price has reacted already. At other times it could just simply be cash flow requirements, and there could be absolutely nothing wrong with it. It could be, let's say that's the largest holding of that person in their portfolio, and they need money to settle a bond, to settle debt, to pay school fees, whatever the case may be. The first port of call was, here's an asset, it's working for me, let me trim a little bit. It might represent 2% or 1% of their total holding. So in the bigger scheme of things, it actually doesn't mean a lot. What we got to be cautious of, back to the Elon Musk story, and I would consider sort of bold tweets like that quite reckless, because it's a publicly traded company, it's a publicly followed company, it's a publicly held company, and people could misconstrue the intention behind announcements like that. And so, I think that's reckless and inconsiderate to shareholders, suggesting that your stock might be too expensive. I mean, if it's too expensive, well, sell some of your stock. There's a simple solution. If you think it's trading at a price higher than it's worth, then sell. If you think it's trading at a price lower than it's worth, then buy.
Great, thanks, Nilan. And I think just to remind our users again, use the research freely available to you on the Easy Equities platform, research.easyequities.co, which gives you some information on the companies as well to help you. And Nilan, I think it would be great if users also follow the JSE SENS on social media, because that's constantly updated, freely available, and is not something that just the clever trading oaks like you need to follow.
No, absolutely. Yeah. Also, if you really have interest around the stats and the publicly distributed stuff that's going on the exchange, there's a market statistics page on the JSE which literally publishes everything. I mean, you can see what foreigners are doing on our local market. Obviously not live data, so you'll get weekly information about whether foreigners were net sellers or net buyers. All of this creates thoughts and assists you in understanding the ebbs and flows of the market if you're really trying to decide what to do.
Right. Nilan, last thing for you, and we're going to also answer a couple of the users' questions. I just wanted you to touch very briefly, it's a broad topic, so we'll talk about it another time, but just very briefly on corporate actions, which also potentially influences value and the price. And I think if we can pick one corporate action which relates to dividends, because we have users who are delighted when they get a notification they've got some extra money in their account, but maybe just briefly tell us how that happens and some advice to the users, please.
Sure. So corporate actions, like you dividends, like you mentioned, is just one element of a corporate action type of activity. There are a host of others. There's mergers and acquisitions, there's consolidations, there's splits. Focusing on dividends, we should all know by now that dividends are excess profits that are split up between shareholders. So it's a reward from the listed entity to its shareholders to say, we've created this value in the past financial year. Here's some excess cash. Thank you for investing.
It's only you and a handful of people that did know that. So thank you very much. So we all now know that dividends is excess profit that's split amongst the shareholders.
Yes, so that's distributed to shareholders. And so importantly, it'll form part of one's investment decision process, right? When you're looking at companies to invest, does it have a dividend yield? And a dividend yield is simply that dividend amount over the price, which creates a percentage. So you can understand that, the stock yields 5% in dividends. Importantly, this is over and above the price appreciation or depreciation in the stock. If the stock goes from 10 Rand to 15 Rand, you've made 50% plus the 5% dividend yield. So, it needs to be seen as a separate thing. And quite often from a fundamental perspective, when you're talking value, people will incorporate dividends in this calculation to understand that, not only are we yielding 5% statically for the last 10 years, it's gone up. That dividend yield has gone up by 10% every year. So there's forward prospect of growth. And so what happens is there are a few specific dates that are pertinent to dividends. The one being the last date to trade. In other words, by what date do you need to be a shareholder of this company to qualify for that dividend? You need to understand that, because if you buy the day after, guess what? You don't qualify, you're not going to get the dividend. If you buy it before and obviously hold it as a close of business of that last day to trade, you'll get the dividend. Then the next important date is the X date. In other words, at what date does the stock trade excluding the dividend? Let's say there's a share, again, trading at 10 Rand, dividend is 1 Rand. So it's got a high dividend, 10% that it's paying out to shareholders. Typically, what should happen to that share price on the X date is it should drop by the 1 Rand, representing lower value within the company because that 1 Rand has been distributed out per share. So that makes complete logical sense. On the X date, the share price should be trading at 9 Rand. Theoretically, that may attract buyers, and buyers may come in and buy more of the shares because they think it's cheaper at 9 Rand and getting in for the next round of dividends. So, but in theory, that share price should simply be on the X date, the amount of the dividend less the previous day's close, if you like. Right? Makes sense. Perfect. And then the last date is the pay date. And that's the date that the money actually gets distributed to shareholders. And so we handle all of that in the background. We have a corporate actions team, that runs all these systems that we have to settle these dividends on time, obviously to firstly receive the dividends on behalf of our clients, work out who gets what, and then settle that on the payday.
Great, thanks, Nilan. And I think we'll definitely pick up on some corporate action details tomorrow, because it can help users choosing what to invest in. We're also going to chat tomorrow some of the physical trading that you and your trading desk execute, what you'd use, your systems, all the clever screens and information, which is fascinating to get a little bit of a behind the scenes look. It comes natural to you, but I know certainly I find it interesting, and I know many of the users will. So just to wrap up, I want to say to the users that are asking Nilan and myself, when should I sell my shares? Which shares should I buy? I want to conclude with answering it in this way. Easy Equities does not think that we know more than hundreds of thousands of clients. Some stockbrokers and some platforms might think we don't. What we believe in is that we want to expose you to clever people like Nilan, to research, to your fellow users on social media. And we think you're the most intelligent investor out there, because the question is best answered by you. When you should sell will be different for one user to another user. It depends on your life circumstance, your age, if you need the cash now or later. When you should buy depends on your other assets. So there is no right or wrong answer. And what we want to do is to empower users constantly through this WTF series, through our research, through social media, through answering your questions, to help you understand that you are the smartest investor. And we see that daily. Hundreds of thousands of Easy Equities users are smart. So gather the information. Congratulations and thanks for joining us today, but trust yourself. So Nilan, final word to you. Yesterday we had one of our users, Nell, winning the competition on the pronunciation of Musk's son's name. And we're going to give $100 to 3 users today. Standwa, Lesedi, Manolo, and Barry will be handling that. And you're going to ask the question. And if the users can just tweet that or post it on any of our social media channels, and maybe just do hashtag WTF, we'll pick that up. But if you can maybe give the question that you have today relating to the JSE, please.
Yeah, so and the trivia for today is simply, which is the oldest and still listed company on the JSE?
So the one that's been around for the longest and that's still on the JSE.
Correct. Yeah.
Good. You can give us a clue. Is it a well-known company? How hard do we need to search?
A holiday destination would feature.
Okay, you're good at this. You could be a quiz master next. So thank you very much to all the Easy Equities team who helped with the series. You guys are legends. Thanks to all our users. Happy investing. Doing some research, finding it all out. Stay safe, and we'll see you tomorrow at the same time. Yeah, thanks, Nilan. Enjoy your
Thank you.
yourself. Cheers, guys.
Thank you. Cheers.